So thank you for being here. This is the first technical session of the day. We're going to be talking about measurement and learning in financial inclusion. I'd like to invite Neeta Goyal from the Gates Foundation. She's the country lead for measurement, learning, and evaluation as the moderator for today's panel discussion. Please welcome her with a round of applause. Our first panelist for today is Krishna Das Nair, Executive Vice President, Bharat Banking at Axis Bank. Please welcome him. Our second panelist is Swapnil Shekhar, co-founder and director, Sambodhi Research and Communication. The third panelist for the day is Priyadarshini Ganeshan, Senior Research Associate at Dwara Research. Our fourth panelist today is Roma Vasudevan, Senior Director, Digital Lending and Risk Management at Axion. And our fifth and final panelist for the day is Ajay Kodumagula, the Chief Sales Officer at FIA Global. Thank you, panelists, for being here today. Thank you, Neeta. We look forward to an insightful discussion with each one of you. Over to you now.
Okay, now it's working. Good morning, everyone. Thank you for joining us bright and early for an MLE session. That takes a lot of brave souls coming into a room to talk about measurement and learning. The room, as you can see, is not quite full yet, but we're going to get started out of respect for your time and also for the panelists who were here even earlier. So as Shoma already mentioned, my name is Neeta. I lead the measurement, learning, and evaluation team at the Gates Foundation. And so today's topic is one that's really close to my heart. So when Pavan suggested we should have an MLE panel, I pretty much jumped on it and said, I think it's a great idea. I've met most of the panelists today, this morning, about half an hour ago for the very first time, and I'm pretty excited about the conversation that I'm hoping you all will join in and be party to, because it got pretty interesting even just in the short briefing that we all had. We are fortunate to have with us both program panelists as well as research panelists, which I think is an interesting mix because in my mind as an MLE person, the two go together. Without programs, there's nothing to evaluate or to research. And then when you get the findings, what happens is, in the ideal world, we plow those findings or that evidence back into the programs or the policies that we are working on. So in terms of today's topic for financial inclusion, we know that India has made great strides in this direction in the past few years. And our program panelists, of course, are experts on that as well. But today through this panel, we're hoping to explore a larger question around impacts. How do we measure impacts of all this wonderful work that is ongoing? And what are some of the challenges around those impacts, both in terms of gathering the evidence, in terms of analyzing it, and then finally in terms of using it to improve programs and policies, which is, of course, the objective of any kind of measurement and learning exercise. So I think with that brief overview, I am now going to invite our speakers to weigh in. We'll start with the program panelists to hear their perspective and then move to the researchers to hear more from them. So I will pose the first question for the program panelists, and if you all could respond, since all of you work in slightly different contexts, it would be good to hear from you when you speak about the gaps or the opportunities in terms of your specific context. So my first question to you is, are there reliable data sources on factors influencing access and usage? And how do you currently measure program impact? There is a mic there, I think, but I can pass this one to you.
Thanks, Neeta. Thank you, Axis. I think this is my third, participation in terms of being a panelist, and it's been a great journey so far. So thank you for that. In terms of reliable data sources, Sunita, if you really look at, I mean, one is on the quant side, where we look at maybe 3, 4 sources. One is once the customer avails a product, we get a sense of the transaction, and that gives us a good insights into the usage of the product. So transaction-led data, whether it's payment, whether it's savings, whether it's credit behaviors, we're able to get a lot of insights once the customer avails a product. Then you have third-party, data sources like account aggregators, which is still not baked into as far as FI is concerned, because participation of, let's say, PSU banks have to really go up to get a feel of how the FI data is flowing into, let's say, an account aggregator. Similarly, we have mobile, app usage wherever we are able to, in terms of, let's say, industry today, a lot of players have got apps, and the app usage also gets us a lot of insights on the usage, which product they are clicking on, what information they are trying to fetch from the apps. So those kind of information can come in. On credit bureaus play a very large, role in terms of giving us insights on a quant side. From a qualitative perspective, the FGDs, the surveys that we do, these give us good insights in terms of what customer wants, our needs are, what kind of issues they're facing. And the last part, there's also to do with quant, is more to do with, let's say, customer grievance or complaints or any kind of fraud that would have happened. Those give us a lot of information about why things went wrong, why customer fell in the trap, or why that claim is happening more frequently in particular geography. Is there a morbidity issue there? Is the higher morbidity risk more? So those kind of information come through complaints and claims and fraud related information. So these are the 3, 4 areas that we really rely on.
Thank you. Thanks so much. Roma, may we come to you next?
Yeah, hi. So just to take a minute to briefly introduce and put in context where I come from, I work with Axion, and our vision really is to create a inclusive economy that allows access to underserved people, especially women and small businesses. And at the highest level, our impact framework also looks at increasing reach, quality, and then basically, is that changing things in the right direction to improve the access, to improve usage? And coming to data, and specifically data, I would concur with what we heard from Krishna earlier, is bank accounts, transactional information, sources like those are reliable data sources that we also see. But in addition to that, I think what we also try to do is take a approach that is, while working with our partners through, when we are engaged with them through our advisory services, in ensuring that we are measuring and collecting the right variables that allow us to at least have some understanding of if there is impact. So one of the examples of that is one of our flagship programs with the MasterCard Foundation. We did a longitudinal study during the program. So it was not just looking at whether they had, it was just not looking at a number of whether the product was taken up or how many people actually got access to a product, but also then understanding how that product affected customers. So I think in terms of data sources, available and reliable transactional data seems to be, and bank account data, bureaus, etc., seem to be the most reliable sources. But also, we tend to want to augment those with studies and research that's happening during the length of programs running to capture those and then measure impact through them.
Thank you, Roma. Jay, yeah, please go ahead.
So, thanks, Krishna and Roma. Sorry. So while we at FIA Global, we are like working with the bottom of the pyramid, right? It's been 12 years we are in this industry, and we have contributed to the underserved and unbanked through the Jan Dhan accounts. So our side story is like we have the information available of the customers on what kind of a deposits, transactions they do. We do not have a direct information, but through our agent we have this information available. So what we are trying to help the customers, especially in the rural, which is where we are working, that key what kind of a RDs or FDs they need to go for, based on the usage pattern of the customer. Right? For example, if some customer, a lot of Jan Dhan accounts are used for a DBT, but
Right.
that's the typical thing is there. That's a typical scenario. But however, there are some set of customers who are, since they got the access to the financial services through the bank accounts, so they also tend to look at what kind of a investment or what kind of a savings they can do. Not at a very large scale, maybe to, especially with the women customers who has got the access to the bank account through the Jan Dhan program. So the women are tend to do some kind of a saving more than men, right?
Right.
So now they have this option. So we sort of train our agents in terms of how to onboard those set of customers to avail these facilities. For example, opening a recurring deposit account.
Right.
It could be a 50 rupees or 100 rupees or a 200 rupees also, right?
Right.
Or maybe they can do 1,000 rupees fixed deposits. So that's how we push our agents. We do a periodic training to them, and we kind of set a kind of targets also to them. So that's how, because when you give a number to these people, so they'll try to drive it. So that's how we ensure that the customers are taken care in terms of getting into the financial products, especially not only the bank account, the other information, because the behavior of the customer very different from urban to metro to rural.
Right.
So here it is always assisted model, while in urban or metro it could be a self assisted model, like mobile app usage is there. Through mobile app you can do the transaction, you can also open a FD, RD, all these things, and also you can apply for a loan. But when it comes to the rural, it is always assisted. So they rely and depend on the agent who is facing the customer.
Right.
So that's how we are kind of helping the customers to get the access. Now we are also focusing on how can we help them in terms of accessing the loans products as well. So that's the thing which is going on.
Okay. Thank you so much, Ajay. We will move backwards with you only. So we'll start with you this time. My second question is more around building on what everyone has said. I noticed all of you mention women customers as being important and also in some ways a hard to reach group. So may I ask all three of you to weigh in on what are some of the challenges in trying to measure impact, especially with these hard to reach vulnerable groups, which could include women, but could also include the unbanked populations that you were talking about?
Okay, so on this we have done a project in Assam with Dwara. So what we have, the learnings over there is, while the customers have got the access to the bank account,
Right.
now they want to, there are some set of customers who want to explore what is next.
Right.
How can I be part of this digital India? So can I move from a feature phone to a smartphone? What is that? With that I'll get an internet access, right? So through that, can I start selling my produce, maybe e-commerce, or can I start investing in insurance? Can I start buying an insurance product, or can I start investing in mutual funds? These are some of these findings which we could come through that project, which are really helpful. But however, the information available to us is very limited. So that's where I think we need some kind of a access to the information so that we can target the larger audience.
Okay. Thank you, Ajay. Roma, maybe come to you.
I think one of the challenges that we see while it comes to measuring impact, or especially for women or underserved groups, is the right data being captured and embedded in right when you're launching a product or a service, and then are you capturing it in a meaningful and dependable way that it can be used to do exactly what he said he wanted to do, is segment customers, have a much more refined approach towards product design, ensure that you're not just offering a one solution to a customer and capturing some information, but based on the information that you're capturing and their behavior, then being able to bundle the right services, but give them the right products, customize it to their needs. So I think that the challenge really there is that institutions need to take a much more thought through approach in what they are capturing and how they are capturing, and whether it is usable over a period of time for it to be valuable to them and to the customer.
Thank you, Roma. Here you go. Ajay, you next.
So if you look at from a challenge standpoint in terms of data, right? For example, today, if I have to do an income assessment, how do I do it? I mean, and is it at an individual level or is it a household level? So really getting a sense of is the cash flows and income becomes a big problem. So we really looking at for the informal segment, is there a cash flow based, credit score available or a method available to do a credit modeling? So that becomes a very important input for us. The second biggest challenge is most of these customers are changing their phone numbers very frequently. So if they keep changing the phone numbers, I mean, for us to have a data track or even to connect next time around what the feedback is becomes very, very difficult. Third challenge is they're seasonal migrants. So today they are here, 3 months down the line, they're not available and they come back after 6 months. Some of them disappear, some of them come back. So there's no consistency in terms of connect with these customers. And that also poses challenge when we lend to them or we, give them a savings product. How do we track that when they're not physically available? Fourth important thing is that, as I said, household becomes very important in these segments. It's not just an individual, the I would say the women or the husband. That's not. It's the entire household, and that sort of an information is today becoming very, very difficult to get. So primarily, these are the 3-4 areas that we're struggling to get information and see how we can best use to build the right product.
Thank you so much. That was such an interesting list of challenges that we run into when thinking about data and evidence to inform programming for greater impact. I'll now turn to the two experts we have on our panel who've been there, done that, and get their views on some of the constraints and challenges with regards to measurement. You've heard from so Swapnil and Priya, you've both heard from the program folks now. What are some of the challenges that they experience or the constraints that they experience when they think about trying to gather evidence in service of impact? Could you both now speak a little bit about how life looks from your angle? FI, I think as we were discussing earlier, is a part of what we in the research world or even the programming world would call women's economic empowerment, as you have pointed out, Swapnil. And it is a really important part of that because those Jan Dhan accounts, you all know better than I, the impact that they've had in terms of allowing women access or facilitating access to banking services, for example, right? So what are challenges and constraints at your end when the program folks talk about their constraints? Are there echoes? Do these resonate with you, or do you experience other challenges when it comes to measuring FI impacts? Swapnil, would you like to go first? I hope that mic's working.
Thank you, Nita, and it's a pleasure to be part of this discussion because microfinance and financial inclusion as a part of Emily, Sambodhi is a multi-sectoral research organization. So for us, the tricky part of including financial inclusion in our measurements is that financial inclusion is just one of the levers towards, say, livelihood impacts or towards women's economic empowerment. So our focus for financial inclusion has essentially been at the level of outputs, not at the level of outcomes. So the basic question that my team usually sort of asks whether prosperity led to financial inclusion or financial inclusion led to prosperity. So this is sort of the question of endogeneity that we call is something that we are still to unpack. From where I see the sector, financial inclusion, so that inclusion sector is driven by also by core commercial sort of motives. And so the focus has historically been towards research or understanding or unpacking consumer or customer acquisition and retention than actually articulating livelihood impacts or women's economic impact, and nothing wrong in it. Right. Just that we need to make sure that, understanding of consumers or customers also echoes in the way we articulate impact. So the discussion that we were having in the morning is the challenge that we face as researchers, evaluators, is that our way of articulating theory of change, which you would also speak about, theory of change has been more linear towards financial inclusion. So it has to be unpacked in a way that theory-based evaluations can be located within this ecosystem. So we do not have, if you see the literature that is available in the ecosystem, we do not have many sort of studies done on establishing causality for that matter from financial inclusion as a lever or an intervention. So this is something that we need to unpack better. So what happens when, say, Jan Dhan account is opened? You rightly mentioned household as a unit. If not women, if not the man of the house, then household as a unit, does it impact the household? Does it impact an individual? Does it impact the socio-economic well-being of the family? So we do not have this level of impact articulation as we see. And one last point, Neeta, is that overall appetite for longitudinal data in the sector. So there are challenges which you also pointed out around availability of the same set of respondents, absence of cohorts, so there are challenges to that effect. So, but I also see that overall, and this may be a bit controversial response, but overall there is a lack of appetite also towards consuming the data that is already available. There are challenges to the data that is there. So you have national surveys, you have international data sets, but there are challenges to the usage of it, but overall appetite on designing products using the data that is already available is something that I have not encountered when it comes to engaging with the financial inclusion ecosystem.
Thanks so much, Swapnil. And maybe that's a point we can come back to, that if these data sets exist, and Priya, maybe you also may want to refer to this a bit, then what are the challenges in using them? On the one hand, we are hearing there's the program folks are talking about administrative data being available and being able to use that and how valuable that is for them. On the other hand, we are also hearing there are data sets which capture information on a particular segment that we want to influence, but that is not being used. So where do these two meet, I guess?
I think this is a problem, as you earlier mentioned, is prevalent not just in financial inclusion, but across different thematic areas. And interoperability of different data sets is a challenge that's going to exist for quite some time. And it's not something that we can solve at go-get. It needs, like the program people are already talking about, some of the access and usage data that they have ready access to, that they are already garnering insights from, and yet that is an insufficient, it's a necessary but not sufficient metric for garnering any insights about impact. And even with that data, as long as it's disintegrated across different mediums, we still do not have, we have the technical capacity, but the people capacity to make sense of that data yet. And that's going to remain so for the foreseeable future. So another way of looking at how to measure impact would be to kind of not think with path dependencies that, okay, we've looked at access this way, we've looked at usage this way. So this is similarly how we're going to look at impact as well. So perhaps we need to kind of come back to first principles and think about, okay, finance is a means to some end. What is that end? If that end is dependent upon so many contextual factors, then there is a lot of subjectivity that is inherent to it. Like, as to the challenges in measuring outcome metrics, that is one of the challenges, in the sense that outcome metrics like confidence of your financial future, your resilience, these are all self-reported. There is a lot of subjectivity inherent in it. And then you try to contextualize that again with household level profiles, like what is your household income, how many members are earning, what are the different contingencies that the household of your profile typically goes through, and then there is way too much subjectivity. And to make insights out of this is both a qualitative and a quantitative effort, and right now I think there is far more focus on quantitative rather than qualitative, and perhaps the needle has to move a little bit over to qualitative before coming back here.
Okay. Thank you so much. You mentioned one of the points that I'll flag, Priya, is you talked about there is a gap in terms of capacities to be able to analyze the data, to look at all of these factors. So the interoperability of data, of course, is an issue. I understand that. But you mentioned there's a people problem within quotes, which is going to take us a while to resolve. I wonder if you could elaborate a little bit. And then, Ajay, I know you had mentioned, I think, in our earlier comment about trying to use AI, for example, to address some of the segmentation issues, etc. How do these two play together? Maybe, Priya, if you could come in first, and then Ajay, we'll come to you.
Sure. The way I was looking at it as a people problem is that yes, there are models, AI, ML model, that can make sense of this data. But as long as there is no standardization in how the data is being collected, its fidelity for usage in an AI, ML model is still questionable. So the standardization. So for instance, Krishna mentioned about household income assessment. Until the recent RBI regulations, there was a lot of variability in how different microfinance institutions did household measurement, income measurement. I don't think it's still uniform. We still have a long way to go in terms of different MFIs following the same model. So if the income data is going to be so varied and the field staff are going to use different methodologies, then putting all of that together into an AI/ML model is still not going to give you results of very high fidelity. And that's where I think it goes back to the field agent. It goes back to the MFI standardizing their procedures.
Thank you. Ajay,
So,
would you like to?
while we understand that the data accessibility is a challenge because in the area which we work, so we have kind of built a model with with the help of AI, so which actually leverages the customers in terms of how to access the information and what kind of a benefits which we can give. So with the limited availability of the information which we have, we kind of built a model. So that is actually kind of trying to sort the issue, at least at whatever the information which we have. With that, we are trying to address those issues.
And are the the issue Priya raised about having data? So AI models will depend on having the requisite data sets available,
Exactly.
etc. Right? And certainly India, I think, is no stranger to AI and anything that is digitally oriented. Do you find ready access to those kind of data sets? Do you think this is going to be something like AI is going to be something you're going to be able to use, given some of the challenges Priya is raising and Swapnil has raised around the data sets, the availability of data, and how data sets talk to each other?
Okay, so what we have also done is, like for example, as I was discussing pre-chat.
Yeah.
So we are kind of trying to address a problem through climate financing, right? So we have tested this in few regions in the country. So where a climate financing is given to a particular geography and the consumers over there on malaria, right? So we have sort of tied up with an insurance company wherein at a premium of 600 rupees, a customer can avail this, whoever is affected with malaria. So they can go and with a proper certification of the doctor and all, they can just go and claim. That
Right.
claim amount would be around 25,000. Now to give this to the larger audience and expand this product to various geographies of the country, because everywhere the climatical conditions are different and the post impacts also are very different. So if we have the access of the information of that, so then we can go and maybe regularize this product in those markets in various regions of the country. So that can kind of help these consumers over there in terms of facing the difficulties during any kind of climatical effects, which post effect they can be able to this would be a really help for them in terms of coping up with the financial support.
Right.
So this is what we have tested and it is coming out well. But only thing is to extend it to the larger audience, we need the information from the government's end, so that then we can probably go and give it to more audience.
Okay. Thank you so much. Roma and Krishna, is there anything you'd like to weigh in on?
Yeah, no, I was about to say that, problems with data always exist. I mean, it's never perfect. But there is room for improvement, I think, in addressing the problem, in trying to consolidate and share information on where data is available, putting context to what is available, and then consolidating and aggregating that as a resource that people can reach into to look for credible information that they want to use for specific purposes. Because I think every time we meet the research folks, they'll tell us, this is available and that is available, and then you just don't know where it is available, and there's no one source to go to say. And also it's important that it comes from with context on what it was captured for, what was the thought behind capturing it. And I think taking a step towards that would really help solve the problem of at least the availability and usage of data.
So just to continue from where Roma just mentioned, the continuity and the consistency, that really defines how reliable the data is. So, for example, if I really want to study a cohort for, let's say, a 2-year, 5-year, 10-year, 20-year, I don't have that, sources available or reports available where we can really rely on that data, right? That's very important to see how an household I would say, because that's an important unit to look at when you study the cohort over a longer term. So that framework today doesn't exist, and that's one of the important things. From an AI perspective, again, the challenge is that I have a smartphone in the house and I don't know who's using it. So who do I nudge and what do I nudge for, right? So AI challenges in this informal segment, I mean, still to evolve, right? So I and you today get the moment you say something, there is a browser will throw back 10 information about it, right? But that's not what's going to happen there. They used to, for example, YouTube is a great sort of a platform. They typically like to see and then take a decision. So, but then who's seeing it and how often she or the son is seeing or the husband is seeing, we have no clue about it. So the subject just gets more complex when it comes to one handphone per household. So these are the complexities when it comes to how to look at data or how to, use a source that's available in a more efficient way. So then we tend to look at more tangible and more direct rather than one which can be inferred using this data. So that's the long and short of what I want to convey.
Thank you. I think that's a really important point, that are we measuring what we really want to measure? Or are we measuring what is easy to measure? Because we don't really have, we haven't yet thought of ways to get around the primary issues. Thank you, panelists. I think maybe now, since we are doing well on time, I wanted to check whether the audience might have questions based on what the panelists have already mentioned, or questions that you have around measurement and learning in the financial inclusion space. So any questions, audience? Yes, Pavan. First one goes to you.
Thank you. Hi, I'm Pavan Bakshi from the Gates Foundation. So I just wanted to check if you had any advice for the FSPs, or we call the financial institutions. How should they embed impact capturing in their processes in their daily work?
Thank you.
And the reason I'm saying this is because to have a research activity done every 6 months, every year is difficult. It's not easy. So is there a possibility to embed it in?
And if I may join Pavan and add to his piggyback off his question, how do we do this in a sustainable way? And I'll say with the bias of working for the Gates Foundation, where if we fund something today, we know that survey will happen, or as Pavan said, the data gathering activity will happen this year, next year, whatever. But this is not something that we can commit to funding indefinitely. And so how, in addition to Pavan's question, how do we ensure sustainability? It's open to the panel. Anyone who'd like to take a go is. Yeah, go ahead.
So in fact, this was one of the points that I intended to raise, because financial inclusion sector has commercial sensibilities. So for us, if we do not conflate business metrics with socio-economic impact metric, it would not be sustainable. We would be dependent on BMGF to support it. Yeah. So, but I definitely see, and this has been sort of true in some sense since the CSR space as well, where you have business metrics, and you believe that your business metrics would be enriched only when you sort of account for your socio-economic matrix, then only it becomes sustainable. So here, when you talk about households, so if household impacts are sustainable, then you are ensured that your loan products, your insurance products would be something that would be sustainably used by the household. So this conflation of business matrix with socio-economic metric is something that I particularly think and strongly believe that it would make the ecosystem sustainable. The other thing that I also believe is because the market side of it has to naturally align to demand for such research studies. Yeah. So it cannot come from a push that happens through a grant making body. So that is something that I still sort of not very enthused about, that in the kind of sort of requests that emerge to us as well, you don't see that kind of demand coming in that we want to understand this customer segment better, and understand the diagnostics of a particular sort of vulnerable group from a microfinance or a financial inclusion lens. This is something that is not happening. So market has to develop. Once the market is developed, as a commercial organization, I believe it would flow automatically.
Thank you. Anyone from the program side want to respond?
So one of the ways that we can look at working on this, as rightly said, it has to make commercial sense for any enterprise to look at a long-term commitment on these things. So the best way to address this is to see if we can look at, for example, in microfinance we have MFin and Sadhan. They are two SROs, and they're doing a lot of developmental projects, and we as members participate in these projects, right? So it'll be good to piggyback on a player like MFin, or we look at SIDBI, NABARD, and these are where the long-term developmental projects can actually go hand in hand. And we as one of the stakeholders are keen to participate with a little bit long-term view on it. So I think that's the best way to bring those resources and long-term commitment to drive this behavior. And this has to be, irrespective of who initiates it, but I think getting this triangulation is very important.
Thank you. Yeah. We'll get a mic to you. Would you introduce yourself, ma'am, and tell us where you're from?
I'm Devika. I work with Axion Advisory, and I lead the impact work for Axion Advisory. At Axion, we take impact very seriously, and over the last 4 or 5 years, we have developed a framework in which we try and embed impact in every single program we do, whether it's commercial or donor funded. And with our partners, we encourage that, we tell them that, the FSPs who have the highest number of touch points with the customers, and you're the ones who are meeting the customer most. And even within the organization, the data on impact is so siloed. Product team will do their own research. For some grant, there is a different research. It's not combined. So we encourage the impact mentality, like you have to combine all the data that you're collecting, and impact cannot be a year-end activity. In every touch point with the customer, try and generate insights which can be used. And as you said, it has to align with the business matrix. And in terms of matrices, we have moved much beyond the access and usage. Access and usage, yes, in India we're able to get to a certain extent, but what is the demonstrated benefit from that usage? Okay, somebody's continuing using a product, but then what? What's happening beyond it? So that's what we are pushing a lot on, and we do work with our investment partners on how to collect and use that data. And another question, if I may ask the panel I had. So more and more emphasis in India, at least, is happening on household level data. Right. And some of us who have worked so much on gender data and women empowerment, we see there's a lack of focus on women data as of now. So how do you think we should address that? So because the entire microfinance industry has moved to a household level analysis. So the focus has moved away from the woman of the household. So how can we enhance that data?
So your question is, there's a lot of focus on household level data.
And women are getting left behind now. The
women are getting left behind. Yeah. Well, this is the exact right panel to answer that question, because they've all mentioned targeting women. So Roma, maybe we could start with you.
I'm sorry, Devika, just if you could just repeat.
Yeah. I think Roma and I are aligned on this because we are from the same organization. Maybe somebody else should answer this question. But with more and more emphasis on household level data for analysis, underwriting. If all the business use case is now household, the data on women is getting lesser and lesser in the market.
I think that we were having this conversation a little bit earlier in the morning, is that that might not be a problem, right? I think it would be the wrong approach to try to segregate women specifically everywhere and make that important from an empowerment perspective when it does not fit the context of what you're trying to do within a product. So I think just that general awareness and where it's appropriate versus not appropriate to take that approach and segregate that information to understand better from a women economic empowerment perspective is, I think, that what would solve the problem to a certain extent, because right now, when you try to force fit it into everything, there is pushback on it. But when you're much more purposeful and intentful in why you're doing it and why it makes sense in a particular situation, then it makes sense. So the household is just as important as women, right, in the context of serving people that are underserved, etc., and making that distinction from the focus of what you're trying to achieve, I think would be useful there.
Okay. Ajay, yeah, please go ahead.
So, when it comes to the women, what we are trying to do, our bit is like out of 40,000 BCs, what we have, 28% are women. So, we sort of kind of, empowering them in terms of becoming entrepreneur, and we want to take this to 40%. In terms of number of BCs working with us, and also we are focusing on the SSG members, because these SSG members are very well connected in the blocks, especially with their women customers also. So that way, the reaching out to them will be also easy. So that's why our emphasis is more on SSG members to become a BC into any of the banks which we are working on. So this is how we are kind of trying to create an impact in the rural.
Okay.
So I think household is a unit largely to assess a lot of other areas. But if you ask me, today in microfinance, it's only women borrowers, right? I mean, like for example, in Axis Bank, we have 27 lakh women borrowers. So it's the entire focus is on women. The only thing is that whatever loans are going to them, it's not necessarily getting consumed by the business activity. It goes to a lot of other things also. So hence, the household assessment becomes very important, right? And we also believe that eventually what she brings to the table has an impact on the household, because it's the man of the house sometimes influences a lot of those decisions. So understanding that aspect becomes more important for us to then look at what solutions will work for the household. So the starting point is women. All solutions are, catering the requirements of what women want to do in terms of running businesses. And you see the typical businesses that they run today when we go to them. For example, a dairy, they have one buffalo, one cow. They have a sewing machine. They're running a tailoring shop. They have a salon where they're, catering to the catchment that they're servicing. So the small businesses women run is where microfinance has been working for long. And that entire market has been growing, I would say, for last, except for maybe this year, we look at the last 3-4 years, it's been running at a CAGR of 20%. And this is a growth in the women borrowers. So, and then their accessibility to savings product, they look at other digital inclusions. So all of this are centered around women. So I don't think when we go to household, women gets ignored or it's not the right TG for us. It starts from there and it doesn't, then moves to the household. So for us, everything starts with the woman of the house.
Would the researchers want to weigh in on this? Yeah, please go ahead.
Just also a counter perspective, with agency comes responsibility also. There is also a counter thread that runs along how the burden of debt is disproportionately placed on women. And one of the ways in which we could perhaps mitigate some of this burden of responsibility the microfinance industry has placed on women would also be to recognize that most of the optimization that she does for with the funds that are being made available to her is for the family as a whole. So some of the success that she garners from the fund can only be measured at the household level and not at the individual level. And it's perhaps a recognition of that too.
Yeah, that's a great point. Yeah, go ahead.
In fact, adding on to what you were saying, so women, so unit of intervention usually by financial inclusion would be either sort of SHG or individual women, but it adds up to household income. So one module is always there for women's own income. The challenge here from a financial inclusion ecosystem is more towards the methods that we adopt. So usually income modules are quite long. And for us to have a kind of every 3 months kind of a measurement, because if the woman is engaged in economic activity, you need to understand how it unpacks through the year. So are there lean phases? Are there phases where she has more cash? So that is a problem when it comes to measurement. We do not have standard modules to help measure it fast and nimble. Other than that, I see women income is calculated in most of the work that we are doing. So as researchers as well, we also have to unlearn what we are conventionally doing in VE space or a livelihood impact space to make more sort of commercial or a nimble sense of data for financial inclusion industry as such.
Thank you. I think that was really insightful from all the panelists. I will just also add that sometimes the challenge occurs, and I'm not speaking of FI specifically, but across thematic areas as we do research or MLE. The gender question stops at disaggregation of data, right? Okay, so we've done a gender analysis. What does that mean? We disaggregated data. We know so many men and so many women are in the program, and that's about all we can say, but we've done the gender analysis, and we're happy with that because now we know how many men and women were part of the program. I think pushing the conversation for much beyond that and saying, okay, now we have gender disaggregated data. How do we use that to understand how patterns vary between men and women, right? I know in our preparatory session, some of the panelists talked about, okay, so we launched a particular product, men took it up first. And then subsequently, we had to tailor things to understand why women weren't signing up or why they weren't continuing with it. That requires a much deeper level of analysis than just saying, here are the women in the sample and here are the men, or in the administrative data. So I think maybe this is something we as researchers, but also as program people, pushing or nudging in the direction of trying to understand how does behavior vary. And what are the challenges to certain outcomes or certain types of behaviors that we are sort of looking for, right? So I think it's great to hear that it's already happening to a large extent, but I think there's a need to push a little bit deeper, which is probably what you were heading towards. Other questions? Yeah, please go ahead.
Hello everyone, Misha from Dwara Research. I have a question for Krishna Das. You were speaking about cash flow based credit score modeling. So are there some ideas around how that might be done, especially for the low income segment, since their cash flows are not yet digitally recorded? And of course, we know that their cash flows are insufficient and there's a lot of irregularity. So any ideas, any innovative methods that you guys have been thinking about as to how that could be done? Thanks.
So largely, we're working on a model where we want to start tracking inputs. For example, does the house or the village has, let's say, electric connections? Is there a chula which is running on normal wood stock, or is it running on a gas cylinder? What kind of assets that you see in the house? Do they have a television? Do they have a bike outside? So these are the inputs that we typically take. Then we go into, that's lifestyle based. Then we look at, in terms of the core business activities, right? So if she's into, let's say she's got 2-3 buffaloes, then, what kind of production that you see, what's the per liter, sort of income she gets. So there are these kind of proxies which are being used to derive. But if you ask me, is this the best way to do it? Not really. So we are really looking to see how this can be further enhanced, refined, and put in a proper model, and which helps us to then bring out a scoring based assessment of this entire thing. So we're still far away from there. Whatever is being done is basic intelligence which is available and the data that comes in. So one is the consistency of the data flow, and second is to put it into a framework which gives us a more reliable score to depend on. So that these are two areas that we're still working with. So happy to engage with partners who can bring this value to us. Thank you.
Yeah, thank you. Other questions? All right, I don't see any more raised hands. Last call for questions. Yeah, please go ahead, ma'am. Could we get a mic? Yeah.
Hi, my name's Pat Richardson. I'm from the UK. I've been in the sector for many years, but not for about 5 years. So for me, it's been great to come here and do some listening. It's just a request, I think. We're talking about trying to have impact on probably the poorest people in the planet. And yet we look, I think I was nodding my head when the guy was talking about social and business matrix. I think the reality is that we have to invest in qualitative and subjective data to understand rather than measure.
Right.
Because we can only decide what we want to measure if we actually understand what's going on. So when you were talking, for example, about a woman having confidence, it's a confidence to do what?
Right.
So I think it's not a question, just an advocation of saying, can we actually have some investment in terms of what we label subjective, but actually is helping us understand. And also on a long term. I, for many years, criticised, and I know it's difficult, we have 3-year programs, we have 5-year programs, but we're talking about social change, and that doesn't happen in 5 years. It's longer, and it's expensive to understand that. But I think we need that alongside the very sophisticated business matrix that we have. So just a comment.
Yeah. Who would like to go? She's asking about, so if I may paraphrase, I'm sorry, we couldn't always hear you. There's a little background noise. But I think you asked about having qualitative data available because we need to understand what we are trying to measure. Was that one?
It's more about a question of advocating. Advocating the investment in qualitative data to help understanding and also to advocate longitudinal data collection for better understanding. It's expensive, but I think you need to have that alongside because that's the only way you're going to understand what is happening with all of these range of financial services that you're doing. And ultimately, the financial services are not delivered for an end being to deliver financial services. It's financial services presumably to improve the livelihoods of those who you're working with. How people develop their livelihoods is complex because it's not only at households, it's also at community level. And I think understanding that requires the qualitative data to sit alongside the quantitative data, and it also requires time frames, which are often beyond 3 and 5 year programs. So it was a comment rather than a question.
Thank you, ma'am. I think there was, we discussed this when we were talking about panels, right? So would you all like panel data?
No, I absolutely agree. If you look at what I spoke in terms of one of the challenges is that we don't have cohort-based long-term studies available today in India. While if you look at the other markets, especially in the West, there's enough information available on that. So can I look at 100 women households or 100 households, how they have, the impact has been created over 3, 5, 10 years. That cohort doesn't exist, right? So how do we bring it? So we endorse this that it has to be a long-term study. And just to add to what Pawan had asked, how do we get that long-term study going and how do we collaborate? Where I said, it can't be just one organization chipping in. It has to be sort of an industry level effort. And that is the need of the hour today, to really look at long-term impact on this business. Otherwise, it's more transactional, it's point in time and doesn't really give us enough insight. So qualitative is the way to go, and that subjective information, or rather qualitative data, has to come into infer on the new product designs and what else can be done. Otherwise, it's more transactional and it doesn't really help.
Yeah, I agree completely. And one adjacent point to that would be that this qualitative churning of dispersed wisdom, so to speak, so that we kind of conceptualize a metric or different metrics for outcomes, also should focus on unintended consequences, particularly negative consequences, because oftentimes in the theory of change, we are far more focused on, we want to achieve, like find what feels good, that we don't necessarily focus on where the pain points are. And that's a very crucial missing link in terms of what is the feedback that the system needs in order to tinker and kind of come up with a version 2.0 of financial inclusion in order to achieve the intended outcomes. And that's something that's kind of crucially lacking at this point.
Just short thing, also agree. I think the length of programs, etc., and the time it takes to see impact, everybody in the room would agree that, there's a discussion to be had there. But in terms of, I think for us, we take a very, like you said, it's not always data driven. And in most of our programs, we are trying to take a very deliberate approach of not just for the sake of it doing a baseline and an end line, right? As far as possible, we are trying to do longitudinal studies with the same group of people that is accessing a product and seeing how they're benefiting from it toward within programs where even if it's not a funder requirement, because that's something that we want to keep consistent in most of our programs, to see that we are learning in the right ways and the right adjustments are being made to at least from a product design perspective.
On the qualitative demand, so the background of it is also comes from theory-based evaluation. So, or essentially theory of change. How do we articulate that? Demand for qualitative insights would come when we articulate our risks and assumptions and we test them. So and qualitative need not be always very extensive. So you have understanding of pathways that you construct on a theory of change. You revisit your theory of change. You test your assumptions. You test your risks. And here comes the need for contextual qualitative data that comes in. It is expensive, but it is something that we need to sort of plug into our longer term M&E designs that we have. Yeah, and the conversation is here about fit to purpose evaluations than actually having extensive evaluations with large scale quantitative data without actually storytelling using qualitative data. Yeah, so I think theory-based evaluation, theory of change with an understanding of risks and assumptions is something that we can inbuild when it comes to qualitative data.
All right, I think, so in summary, ma'am, we all agree with you. So I think we've come to the end of our time, but I'm going to have the panelists have the last word. So if I were to ask for a 30-second summary from each of you of what you might want to see on your measurement and learning wish list. So if you had a wish list for measurement and learning in the space of work, in this space of work, what would you say? And Ajay, would it be okay to start with you?
Especially in the area which we are working, right? So I would see that since the learnings are there in terms of how to increase more savings in rural market, so a rural centric products would really help in terms of should be lucrative to the consumers over there, so that they can start while there is a disposable income issues are still there. But however, in our kind of economy, people tend to save money. So some sort of education awareness has to also be created. While the government is doing through the mutual funds IE and all, but that is still not reaching to the rural. So maybe rural centric products to be worked upon, and this segment to be educated very well, so that because now the accounts are there with the consumers,
right,
and the loan access is also increasing day by day through the SSG and MFIs and all. So somewhere I think we need to have a focus on how to save more money, so that will give us kind of a financial resilience. So I think that would be really helpful.
Okay, thank you.
Thank you.
Roma?
Yeah, so my colleague Devika in the room is from Axion, the person who looks at MEL, and I asked her this question in the morning, and she said that the one thing she would like to see improve from a commercial perspective, because we work with a lot of partners, is how can we, within our programs, embed the collection and the measurement piece of it right at the beginning of it, be intentful about it, and then tie it into the KPIs of the people that are giving those products to customers. So I think if you can solve that problem for her, she'd be very happy.
Yeah, and it would make all the researchers happy as well. Thank you.
Yeah, my wish list would be aligned to what Pawan had already mentioned about how to operationalize this as a standard, business operation. And I would differ a little bit from the panelists here saying that there is a pure business case for this, in the sense that so there is also an optics case to be made. In some sense, there is a rhetoric here, because we are people who are working with the most vulnerable sections of the population. And this is not just commercial capital that we are raising to fund them, but also impact capital. So here, it's almost like a dance between different stakeholders and aligning different incentives. And for good or for bad, across different sectors and themes, ESG and various other standardized third-party impact metrics have the norm. So is there a way that self-reported data by customers or FSPs collecting data on impact themselves is also something it's of questionable fidelity. So is there a way that impact investors or other investors could be made to reconcile their investment decisions with third-party impact evaluations, and those impact evaluators become sort of handholders in standardizing what are the metrics that they collect on a regular basis, and how third-party surveys or impact evaluations happen ad hoc at different points of time. So I think all three stakeholders, the vulnerable section, the FSPs, as well as the investors, need to come together and design how to operationalize that.
Thank you.
fact, I'd echo what Roma and Priya just said. And there has to be felt need for the work that is happening. It cannot be forced on sort of the implementing agency or the FI partner to do that. One of the things that as an evaluator, I definitely believe is we have to unlearn many things that we have been conventionally using in sort of other sectors and make it more accustomed to the requirements of the financial inclusion sector. So this is something that we need to advocate for, and that would lead to sort of emergence of felt need in the sector.
Thank you.
In my sense, I think this is I think 2014 when PMJDY was launched. It's almost 10 years now, and in 10 years we've got to a level where we can say the access to basic savings account is available. Access to basic insurance is available, right? So the access part has now been addressed to a large extent. I think now is the time to look at how do we improve the adoption, and how do you tailor make solutions to address the bottom of the pyramid. And it's time that this will evolve, and for that, an institutional framework on research based, especially qualitative inputs need to come in, and that's where the need of the hour is, and that will help us go to the 2.0 roadmap that we want to lay. So I think putting an institutional framework, I think what Roma said, what Priya said, I think all of that is very relevant, and it's important to put an institutional framework to get this going. And I think as a industry participant, we're more than keen to look at how this can be taken forward. Thank you.
So with that, we will conclude. My most sincere thanks to all of the panelists. Could we give them a round of applause, please? One of the things that's been unique about this conversation today is that we have both program and research stakeholders on the same platform. And for me, that doesn't happen often enough, I think, where different perspectives of people working in the space coming together. Hearing from you all has been really enlightening for me, and I suspect for the audience as well. Thank you so much for your insights and for your time. And I'm hoping this is a conversation that will continue rather than just stay here. At least at the foundation, I can assure you these are questions we are thinking about. So don't be too surprised if we're back in touch, right? Thanks so much.
Thank you, everyone, the panelists and the moderator on the stage, the audience off the stage. It was a very insightful discussion. And thank you, a special thanks to Neeta for gently bringing in complexity and depth into the questions, as well as nudging us towards a very future-oriented perspective, what we'd like to see, what we want to contribute individually and as organizations. So a huge round of applause, and I'd like to invite everyone, the panelists and the moderator, for a group photo. Thank you. As a token of appreciation, we'd like to share a couple of things. Divyanshu? Yeah. So as we've begun on the note of looking at how women can access, or how it's difficult to measure how women are participating in digital finance, the next session talks exactly about this, how to increase this participation. So please stay back and enrich the discussion through listening, through participation, and your questions. Thank you.